Welcome to Straight Talk for Entrepreneurs, where we reveal what it really takes to build a successful business. Whether you are starting with an idea or growing your business, this is the show for you. My guests and I will show you how to build a strong mindset, a powerful body, a profitable business. Hi, I'm Brandon C. Wright, and this is Build a Business Success Secrets. For all the listeners, Tony and I have known each other since college, and we're went to Washington College, which is a relatively small school, would be an understatement for college, right? And we were both psychology majors, which is even a smaller cohort of people. And then, I don't know, college happened, and somehow when I started coming out to the Silicon Valley, I think I saw, maybe I read when you started Rescue Time. Rescue Time was a Y Combinator company, right?
Yeah, sure was. And I was blogging a whole lot back then. So that was probably, I was trying to make some noise.
And that was, you and I aren't that old for all listeners, but what was that, like 20 years ago, or was that 15 years ago?
I don't know if those two statements fit together, but yes, we are that old. And yeah, and I was, when YC was 2008. So it would have been, 12-ish years ago being in YC. And I was, at the time, was a fairly, old fella for YC, right? Like it was unusual for a company to come. We came in there with, some traction, which was strange at the time for YC. And I came in there as like a 32-year-old, I think, or 30, what was I? Anyway, I was in my early 30s. And that was unusual in YC too, which is now actually fairly commonplace. You see a lot of more grizzled folks there, and not just these sort of, 18-year-olds.
But that, and I think that's how I was like, well, you imagine, and I'm sure people know, you lose track of people during college. And at Washington College, I mean, you knew everybody, and certainly in a psychology program, it wasn't that big. And then when I was so excited, I was like, there's actually a freaking entrepreneur who came out of, like, I don't mean that in a bad way, but like a person who came to Silicon Valley has happened. I was like, oh, Tony, I know this dude. But that really wasn't your first company, because didn't you do a web design company out of college when you were in Alaska?
Yeah, kind of super accidentally. I had moved. I was in Alaska and moved briefly down to Chicago, chasing my the one I eventually married. And I applied for a job, and the person who was hiring me said, "Well, this is a contract job," and I was like, "I don't know what that means." And he said, "Well, it means I can't guarantee you 40 hours a week, but I'm going to pay you this much per hour," which I believe at the time was like $50 an hour. And my previous job before that, I think I was making like $18.75 an hour. So I was just like, this to me was this magical world of self-employment. And, there's an attached story about taxation that I realized later in the game of like, oh, wait a minute, I don't get my taxes pulled out of my paychecks, and, all the naive things you are when, when you're doing this for the first time. So went back to Alaska after that, with my wife, and ended up starting a consulting company that we built up to like 25, 30 people, depending on how you count it, before I sold out of that. So that's a services business, which is so radically different than a product business, but one of the easier ones to build compared to product stuff, right?
So that was really your foray from, what were you doing in Chicago?
It was web design. So it was basically contract web stuff. And very early in the thing, I was like a subcontractor to a subcontractor. So I'd go in, as this sort of 2 levels down subcontractor, and in these big wig meetings where they're selling like True Value Hardware, a $750,000 content management system built on Perl. This is starting to sound really old.
Perl.
Yeah.
Like I haven't, probably nobody, young people know what that is, but it was a computer language.
Yeah. It was like the kind of dominant language of the internet, and massively harder to make web applications in Perl than sort of modern stuff. So, we were selling content management systems, which were considerably less sophisticated than WordPress, for $750,000, right? Like just a radical change of capabilities compared to today.
$750,000 to free.
Yeah.
So how did you? I actually never, even when you and I had coffee and hung out, I don't know how you made the leap from psychology at Washington College in Maryland to web design. Did you just gravitate towards it?
Yeah, I'm really super grateful. I think it was really luck that my dad, growing up, he worked, closely with Apple. And like later, I had no idea, like he worked with Apple, like he spent a day with Steve Jobs. When I mentioned that at Y Combinator, I met Ron Conway, my dad's like, oh yeah, I know Ron Conway. I'm like, wait, what? But my dad kind of every day would come home with the new hotness of Apple computers. So I basically had the like bleeding edge computer on the Apple side of things at all times. And I, just played
What
with
was
that
he
guys before.
doing? Not to interrupt you, because he was in Maryland, right?
Yeah. He was actually, so he started a business, and this is kind of one of those like, entrepreneurial, I don't think DNA, but like example of like just growing up and knowing like you can create your own job rather than the default position of like hand out your resume and hope someone hires you. But he started a company selling Apple computers to the federal government, which sounds like a small slice back then or today, which is mostly standardized on Windows. But there's enough sort of contrarian bits of the government who bought Apple computers that my dad's sort of getting the, being the sort of conduit for these sort of arms of government who used Apple, like turned into a really good sized business, which he ended up building from nothing and selling to, I forget who, for some pretty meaningful sum of money at the time. So had done all that startup stuff, but it just never occurred to me that, and it was in federal contracting, radically different thing. So so just random, like he, randomly, like the way he met Steve Jobs, which is totally wild, is Ross Perot, who he also met in some way, like asked him to go check out this company that he was thinking about investing in. And he wanted my dad to go there and get the pitch and bring back a decision whether he thought this was a good investment. And so he went there and hung out with this guy for a day. This guy pitched him all day long, and my dad came back and said, nope, don't do it. That's a bad investment. The company was Next, and the person was Steve Jobs, which turns out in hindsight, my dad was right in that Next as a technology was not going to be a successful company on its own, but folding back into Apple with sort of Steve Jobs at the helm, obviously, turned out would have been a good financial outcome for poor old Ross Perot, who probably didn't find anyway. But so just a wild thing. It just never occurred to me that my dad's like bumping into these people, like, and I didn't care about any of this stuff, right? I was just like, the whole startup world was just this, I never didn't pay any attention to it. So I just kind of grew up with being nerdy. And then in the early parts of the internet, there wasn't, there were software degrees, but the software degrees were in Fortran and Pascal and stuff like that. So these old crusty sort of computer science people really didn't know what to do with HTML and, at the time tables and increasingly CSS as that became a thing. And so, you kind of look to these sort of young nerdy people who, grokked and loved computers. And I happened to be in that simply because my dad immersed me in it totally accidentally. As you know, like a bachelor's in psychology is not a gateway to amazing career opportunities, right? So just sheer luck that I sort of fell into that. So increasingly as the internet ramps up, people are calling me like, Tony, computers, my business needs a website. And I'm like, I can figure that out. And, so that's kind of how I fell in it. Nowadays, you have degrees in this stuff, and there's a lot more to learn, and there's a lot more competition. But at the time, it was anyone who can move a mouse, who wasn't, old crusty Fortran programmer, like, could go out there and kind of, find their own way. It's a gold rush in a really real way. Like, guys with shovels went and found gold. And nowadays, like, individual gold mining entrepreneurs are not much of a thing, right?
No, I think you're really lucky. I don't know, from a fellow guy growing up on the East Coast, I think there was this Northern Virginia movement that happened in the tech world, but for the most part, like, you're just lucky that your dad had that connection, because it just, the East Coast, I mean, it just doesn't have that. I don't even know how to describe it. It almost is like that's not even possible.
Oh yeah. Yeah. I think that's one of the things, if you think about how to build another Silicon Valley, which people talk about all the time, I think so much of it is just like the examples. Like if you grow up in Northern California, you're just looking around at just people just like you becoming gazillionaires because they had some idea of a website that they threw together on a weekend, right? And obviously it's a lot more work than that, but it's almost your birthright because you see it around you everywhere. And, East Coast or Alaska, never occurs to anybody that they could build a software company. It's just something for people out in that magical startup world who can pull off, but surely not us. And it's definitely one of my realizations getting immersed in startup land coming down from Alaska. I came down thinking these people were godlike, and they're really smart humans, but they're just people, right? They're just people who are about as smart as you are, who happen to feel like they have the right to do this. So I think I was super lucky to get immersed in both that entrepreneurial sort of blood and just technology. Just technology to me was second nature, where most people, like, computers were still kind of this weird thing.
So I want to touch on this because I think it's an interesting subject, and I have my own opinions. Obviously, I voted with my feet, right? I moved out here, mainly because I think there were more people like me. I don't think I was an East Coast person. Now that I'm out here, and you're going to reduce the chances of something wrong going on. Why not be in the best place if you're a technology nerd? But and I say this lovingly because I tried and was a member of a group in Baltimore to sort of get the tech scene going there, and was part of that Northern Virginia movement. And now you're in Austin, where everybody is saying is next Silicon Valley. And I find it an interesting discussion, mainly because I think these people, and I'm not saying all of them, because people like Peter Thiel are obviously very smart individuals who have a track record of success that is obviously hard to argue with. But I would argue that the reason that Silicon Valley is the way it is, and I've had an uncle who was part of one of the most successful venture firms in the world here in Silicon Valley, and knowing the history, it's not just because there's smart people here, right? It's because there's angel investors, super angel investors, A round, B round, C round, D round, E round, and the companies to purchase them. And you can't build that overnight. I would argue it takes 5 decades before you can get, Northern Virginia lost its oomph, in my opinion, mainly because AOL left. And AOL was the company that was buying the tech companies in the Baltimore, Northern Virginia area. So then who was going to buy them? And people say, well, there's a Microsoft office. Having an office in these places is different than having the headquarters there. I'm sorry, it's just hard to argue with that. And it's hard to build up a place where you have enough people who were acquired wealth to be a seed, A round, B round. What do you think about that? You're in Austin, and everybody, I talked to my wife. I was like, maybe we should go to Austin. A lot of people are going to Austin. I'm an ocean person. I'm not going to leave the ocean, but maybe we should check it out. Like, what do you think?
Yeah, I mean, most of my sort of startup career was in Seattle, and that's, kind of in the, one of the big startup markets, but always felt like an underdog. And having raised money in the Bay Area, spent a lot of time down with the Y Combinator, Seattle and these sort of secondary startup markets are still miles behind the Bay Area. And I think it's right. This 50-year notion is right, is that you think about this is like you're trying to build a forest. And if you have an AOL in Virginia, well, that's one big tree. And it drops some seeds, but like all sorts of things need to happen for those seeds to turn into sort of seedlings and, small trees and kind of work their way up there so that they're dropping seeds as well and the forest grows. And like one bad winter or one drought or anything like that can sort of ruin this nascent early forest growing in these secondary markets. And and it's this gravity well, right? Like you go to the Bay Area and, the surface area of your luck expands, and not everyone's going to do it, right? There's going to be some really great entrepreneurs in Northern Virginia, some really great entrepreneurs in Seattle, in Austin, whatever. But enough of them do gravitate towards there that, it's kind of overpowering, right? It's like, if you're in entertainment, you go to Hollywood or you go to New York. And if you're in finance, you go to New York or you go to, London, or, there's just all these places have this sort of, gravitational center. If you're anywhere else, you're playing at a disadvantage, which is not, it's overcomable, right? Like you can look at Spotify and Sweden and Stockholm, and Shopify is in Toronto, I think. And big companies can grow anywhere, but like if you want ecosystem, if you want that sort of luck surface area, you go to the hub. And it's kind of a shame, right? Because you want that sort of to be a level playing field, and some entrepreneur in some small city in Africa to have the same shot as some white kid who's spitting distance in Stanford, but it's just not the case. I think it's more the case than it ever has been, right? I think it's a leveler playing field geographically speaking than it ever has been. Like capital is more mobile, and maybe this pandemic is really changing that, right? Where now nobody's going to boardrooms on Sand Hill, they're all doing Zoom meetings. So like these investors who used to find this whole getting on a plane thing really inconvenient. Now they're not doing it. And, maybe this is helping sort of accelerate that spreading out of opportunity. But I still think like, yeah, if you want to maximize your odds, you're in the Bay Area, startups full stop.
And I think it also, to your point, the gravitational thing is just running into people, right? I rode my bikes with these guys for a while, and one day we're riding up Hawks Hill, right on the Golden Gate, and they're like, "Hey, what do you do?" And this is like after 3 months, which is something to be said for, how, like,
Yeah.
people say, "What do you do?" It's really, do you bike? Do you ski in Tahoe? Do you surf? What, like, hike or whatever? And I was like, "Oh, I got this startup software company." And I'm like, "What do you guys do?" We're like, "Oh, we did this finance company." And I was like, "Finance, like what? Payments over the internet?" And they're like, "Yeah." I was like, "Yeah, which one?" "Oh, PayPal." "Oh, okay." Like, and you say that's a chance meeting, but here it's not a chance meeting. You can literally run into these people on a bike, and that can change the course of your entire company in a moment. And I think these other places just don't have quite that density of people.
Yeah, my favorite phrase is, around that world is luck surface area, right? Is that you have this surface area of luck, and it is so greatly expanded in the Bay Area just because, like, at a coffee shop, at a networking meeting, at a, even if you have a job at a company, you're next to 4 or 5 other humans who could be your next co-founder, where that's way more rare in any other market. So yeah, I think it's chance meetings and relationships. Like, your network is going to have, and like all these people, like in Y Combinator, like there's a guy, really, really nice human being who was also born in Iowa, like I was, who had, in 2008 had founded a trivia startup at a YC, and it failed. It did horribly. They shut it down. Later, he went on to found Pinterest, right? This is Ben Silverman, right? So you, like, even like these people, you just sort of random, like, this person's like, and I know so many people are just like, oh, this person doesn't seem like they're really, going to succeed. And then all of a sudden, like, you turn around and they've, like, learned 3 or 4 things, and all of a sudden they're, founding the next great thing. So it's, can't beat it.
It's incredible. So let's go back. You're in Chicago. You find your way to Alaska. You follow this lady who winds up being your wife, and then you do this service company, and then something happens, and you migrate south and create a product company.
Yeah, I mean, I wish I like. So many people have this sort of deliberate, road, and mine was not. Like, literally, I was at the end of my rope with a services company. I realized, this is something you don't learn as an entrepreneur, but, like, you can't quit your company. Like, so I was 6 years in and I was sick of it. And I was looking around like, what else can I do? Like, I could go build web applications for oil companies. That sounds terrible. For the state of Alaska government, the other sort of people with money up there, like, that sounds terrible. I could start another services company, but I already have one and I kind of like, and people I worked with are great. And so I wanted out. And I didn't know what to do. So it was really like this sort of kind of midlife crisis-y moment for me. And at the time, we were fussing around with, like, building a web development framework, kind of Ruby on Rails-esque, but for PHP, and started building a demo app on top of this with an engineer that I knew up there. And it, this is the time when Ajax was a thing, where, like, doing asynchronous things with JavaScript, and, like, you could make web apps not just look like forms and submit buttons, but actually feel like applications that were moving and things were happening on the screen. So we basically said, if we're going to build this sample application, let's make it awesome. So we built this resume management application. Basically, like, you as a employer get tons of resumes in, and you don't know how to sort of sort them and stuff like that. And we built this really cool kind of novel interface for doing that. That was super JavaScript intensive and asynchronous. So all happening in the browser, felt like an application. And people were impressed enough that I was like, oh, let's see if we can get a little press. And I was like, I'd read TechCrunch some, and back then it was just Mike Arrington. And so I, like, tried to get coverage on TechCrunch and stuff like that. And we started getting some coverage in, like, some Ajaxian.com, like, online zines and stuff like that. And all of a sudden got a TechCrunch article. And on the heels of that TechCrunch article, which, like, every time I see Mike Arrington, who's, he's in cryptocurrency now, I guess. But, when I did see him, I would always shake his hand and say, hey, you changed the course of my life by writing that article. Because he publishes that article, and then we get, in the span of a couple of weeks, got emails from venture capitalists wanting to fund us, companies wanting to buy us. And we were like, what do you mean buy us? Like, we don't even have a corporate entity yet. We just kind of threw together this demo. And so we ended up actually selling the company, which was hastily formed. So basically, when we decided we wanted to sell the company, we had to go find a lawyer like, hey, we need to incorporate and build a corporate entity to sell in the next 6 weeks. We ended up selling to a company down in Seattle called Jobster, which is working kind of the jobs resume sort of space. And it was like, what you would now call an acqui-hire, and that their goal was to sort of hire us, patent a couple things, interesting things that they thought we were doing, and then promptly shut down, what we had started. But at the time we were just, we knew it was kind of, it was like buying a job essentially. But yeah, that kind of got us down into startup land, and it was a fairly well experience, and amazing sort of testament to what one Valley blog could do to like a couple of people out of Alaska.
So when you that wasn't a big decision, I guess, at that point, when you were like, hey, I'm going to move from Alaska to Seattle, because Jobster was in Seattle, right? And VC funded, if I remember correctly.
Yeah. They had raised, it's a really amazing company in a lot of ways, raised $50 million, ended up selling for $900,000. So created essentially zero value. The people who worked at Jobster went on to create multiple companies that sold for, at least tens of millions of dollars. Urban Spoon came out of there. A couple of direct-to-consumer things. This hilarious company called Bacon Salt, which made bacon-flavored salt and then bacon-flavored mayonnaise. And they were on Oprah, and it's just wild, the number of people who came out of there and did kind of cool things. Jason Goldberg, the CEO, went on to found Fab.com, which raised $300 million and I think sold for $10 million. So another big raise, big non-success, but a really good education on getting a bunch of really smart people in a very rich market does not equal success, right? You really need a point of view that the market wants, and we never found that. So yeah, I was only there for 18 months, I think, which is the sort of contractual minimum that I had to be there. By that time, they'd done a bunch of layoffs. They didn't lay me off, but you could see which way the wind was blowing.
And then, just a comment on the acqui-hire, because people hear that. Basically, they pay you just for the listeners who don't know, they pay you a rich salary that effectively compensates you and your partners for the quote unquote value, which is really bringing you on board with the stuff in your head. And then they shut down your stuff and say, we got Tony and his partner, we're partners, and we got all the brain trust, and we're good to go.
Yep. Yeah. It's basically just Silicon Valley companies now have a very good formula of what it costs to hire an engineer or a good product designer or what have you. So they can, they have internal numbers where they'll say if we can hire 10 engineers, we'll pay $1 million per engineer, because that's a cheaper way to hire 10 engineers than the old fashioned way, which is actually very expensive when you factor in all of these sort of interviewing and all of the failed candidates and whatnot. Right. So it's a way to acquire interesting people who might not otherwise be acquirable.
Right. So then you're at Jobster, you do the 18-month minimum, and now you find yourself in Seattle, which is a step up from the Alaska startup market.
Yeah. We had, it's funny, mid Jobster, I'd come in with Jobster, kind of with stars in my eyes of startups. These people are going to be amazing. They're going to be gods of technology and product. And I have so much to learn. And I had so much to learn, but when I got there, and I was expecting oh my God, the pace, I've been in Alaska, a little backwater. I'm going to come down here and there's going to be working 80-hour weeks, and I'm not going to be able to keep up. And I got down, and they weren't working 80-hour weeks. They were working, relatively mellow weeks. And B, the pace of software development was glacial. Being a consulting company, I'd have customers come to me and say I have a $50,000 budget to build this thing. And I'm we will find a way to build that for $50,000, right? And Jobster had no urgency or budget, right? They had huge piles of money in the bank. And so urgency is a powerful thing in entrepreneurship. And so like we would just go round and round with these long email threads, CCing half of the company and BCCing the other half, and these big, long, expansive documents and letters and these meetings with 14 people in them where like, what did this meeting accomplish? And so I was like, 6 months in was like, are we actually building any software here? Like, I mean, what percentage of our time are we spending building software versus just talking about building software, which is also important, but maybe we should balance that out a little bit. So I really like, it's funny, we were geeking out with some friends of mine and we were talking about like, we could probably build something that just measured how you spent your time, that basically just sat on your computer, and anytime a window was in focus and your mouse was moving, it's just sort of, recording that time. And at the end of the day, we can say 30% of your time is in Outlook, 20% of your time is, spent in Gmail, Facebook, you name it, basically everything on your computer, we could give you a pie chart of that. And that's kind of how Rescue Time was born, because I wanted to have a piece of paper that I could go into Jason's, the CEO's office, and say like, this is how we as a company are spending our time. Is this how we want to spend our time? And I never did that because, didn't get it built by the time I left, but that was kind of the genesis of the idea, and started being this little sort of side hustle kind of thing.
So yeah, for everybody out there, that's really, I think you had just sold Jobster, and then I heard Rescue Time was in a blog or something. Like you said, I think you were trying to get press, but so you leave there, and did some people come with you and you decided to do Rescue Time, or did you take a minute off and then decide to pursue Rescue Time? How did that transition?
Kind of jumped straight into it. I mean, we'd already kind of started poking at it a little bit, and that sort of created some more urgency. And, as you sort of socialize these ideas, this didn't exist at the time. And you tell friends, they'd be like, yeah, I'd kind of like to know that. I'd like to have that for my computer. And so we saw, had this anecdotal interest, and I had, the friends that I'd been hacking on it a little bit, all wanted to sort of, keep hacking on it. And, one of them was an ex-Alaskan who sort of caught the startup bug, and he was excited about turning it into a company. So we went through all the motions and created, back before this was kind of the normal thing to do, we created a landing page with some, vaporware screenshots and said sign up if you want to get notified when we launched, and got 30, 40,000 people sign up for that. And a really good percent sort of rate on the number of people who saw the page versus signed up. And we're like, wow, we're kind of onto something here. And, but none of us were making any money. So it's kind of, one day I think we had the realization of why don't we apply to Y Combinator? And if they accept us, we'll take that as a signal, let's go all in on this. And if not, we'll maybe just say it's a hobby or shut it down or whatnot. And so applied to YC, and which is, again, weird to do back then. It was only people applied with ideas. You didn't have a company, you didn't have a product, didn't have customers. You just two 20-somethings with an idea that they wanted to hack on for the summer. And we're like, hey, we have a launch list of tens of thousands of people and a bunch of software that's in prototype phase. Got into YC in 2008 and ran from there.
I remember you were down there. I found that I remember you said to me, and later I actually read the information, but it's a third of your time's on the company, a third of your time is exercise, and a third of your time is something else, right?
Yeah, I don't know. Yeah, back then, YC is very health oriented now, which at the time it was kind of all in. But yeah, we could measure, obviously we had a great measurement of our time and how much time we spent on computers. And it was basically, computers and some get out sunshine, exercise, and, food. At the same time, Joe, one of my co-founders, and I were both like, hey, we should lose weight on this low carb thing. And so we were doing the, Atkins-y sort of South Beachy kind of stuff. And I think together we lost, what did we say? 144 sticks of butter is how we measured it. So we were trying to be sort of healthy, but that was rare back then. Everyone was M&Ms and Diet Coke kind of thing was the normal sort of startup mentality.
I remember that. You and I met at the corner there, right down in downtown Mountain View. So then you go through YC and you decided to raise money. I mean, it obviously worked out. I mean, this is you guys going into it saying, which I guess is a good approach for people, right? I mean, I think we all do it as entrepreneurs and say, if this happens, then I lean in. If it doesn't, then I either kill it or move on. But you keep making these rules hey, if we get into YC, you get into YC. And then did you have it like, hey, if we can raise money, yeah, we'll go try it?
I wish it was more thoughtful than that, or as thoughtful as that. It was definitely more like, I don't think we really knew what we were signing up for at YC. And like the default at the end of YC is you're doing demo day, and the default purpose of demo day is to raise money. So, we kind of did that. And it was definitely less of a like, now I think I take an approach with raising money of like, to a large degree, the market decides how big your opportunity is. And it is dangerous to raise money before you know how big your opportunity is. And so never occurred to me to say like, hey, is this a venture fundable business? Like, what's the pitch? It was more of a like, this needs to be a venture fundable business for us to be able to pay our paychecks and to keep working on it, which we all wanted to do. And so, I worked with Paul Graham and YC and all those folks to like figure out what pitch would resonate with investors. And that was the pitch I delivered. And it was the pitch I believed too. It wasn't like I was actually just making stuff up, but it was just kind of like, it was a very sort of like, just sort of sliding down a track of this is the next step is raising money, rather than like, because raising money is like, you're kind of signing up for a commitment for multiple years of your life at a time where you don't know a lot. So I think, when you decide to raise money, especially like, it's nice to be in a position where like later in your career, like, at our age with our backgrounds, like it's easier to just kind of raise money on an idea. And that gets a little scary, because what if that idea doesn't work in year one and you're still sitting here with $2 million that you promised investors you'd do something good with? Like, you can get kind of trapped in these things. So I'd be a little more hesitant now, but yeah, at the time it was just like kind of desperation of like, this is the next step.
Well, I think that's a vital point though, Tony. The thing you said, you say it like it's every day. And I think as you get older, and you've done a few of these, you sort of get it. But the point is, and I remember doing this too, is you feel like you got to raise money and you got to make the pitch fit the fundable message. The problem with that is that eventually payday comes, right? Yeah. And I think that's the big challenge. I don't know, Tony, that I found over the years, and maybe the lesson that I've just come to deal with. Like, one is it's okay to have a business that throws off cash and is a lifestyle business. But two is, if you decide, and I had this conversation with somebody recently who I think, I'm not going to name it, but has a really good company here in Silicon Valley, and I think could make a lot of money, but will be challenged because they raised money from VCs. And once you do that, right, you're at 100x return. I mean, I'm exaggerating only slightly though, right? Yeah. And then you're going to have to burn down your money. And your other point that I think is important is you want to do this company so badly in many ways, but you've got to pay yourself some salary. And ultimately it's like, I don't know about you, Tony, but I feel like in my spreadsheet that I build in my business plan, there's this one tab that's completely blank that you just say, that gets you from here to there. It makes absolutely no sense, but it's like the magic pill that's just going to work, but it doesn't work.
Yep. Yeah. Yeah. I think like at that stage, you don't know what's going to work. You don't know how well it's going to work, and you don't know how big it could get. And I think now I also have a little bit more of an attitude of like, VCs are coming in, betting on the market. They know there's a lot of uncertainty. Like I would, nowadays I wouldn't raise money with financial projections. Like I would raise money as honestly as I could, which is like, hey, we're taking a run at this market. There's a really good chance we might find ourselves 15 degrees to the left or the right, and we don't know what. We might serve a slightly different market. We might pivot, so you're kind of betting on the bets that we're going to make. And here's what we know so far, but like there's a lot we don't know. And I think the problem is that most entrepreneurs pitch, a lot of entrepreneurs who successfully raise money are great salespeople. And great salespeople know what the person needs to hear to close the deal. And when you're in that sort of moment of desperation of like, I can't pay my co-founders, I can't pay myself, I can't keep serving these customers who I love and want to help, I can't keep building this product that I love and want to build, unless I say what this person wants to hear. And a lot of good salespeople, like I at the time believed what they wanted to hear, right? Like Paul Graham talked me into it, and I talked myself into it, and I went in there pitching like I believed it because it did. And yeah, but it's I think a lot of people do it. Like there are people out there who don't believe it. They're out there just telling whatever lies they need to tell, and fussing with whatever numbers and faking, traction and like throwing there's a phenomenon where young startups would, spend money on AdWords to sort of show this up into the right graph. They're just basically buying a graph that they can show VCs to allow them to raise money. And like you say, eventually you have to pay the piper there.
Yeah, I call that being on the crack pipe.
Yeah.
Is like if you think that you are going to advertise your way into a customer acquisition cost that just simply doesn't make sense, but you're going to be able to show the curve, eventually you're faking product market fit. I mean,
Yep.
in many ways. You agree?
Yeah, totally do. Yeah, Sam Altman, had said very loudly, and a lot of YC companies don't listen to this, which is if you aren't growing, organically, like don't spend money on advertising. Like, you only need to buy as many customers as you do to test out your product to see if they love it. But if they don't love it, and if they don't love it enough to tell other people, like you're not there yet, which is like yeah. But when you're buried in money and all this competition, you got demo day and competition with investors and everyone else is doing it. And you're the one person who's like being honest in that pitch room and not spending money on those ads. Like you don't look as shiny as those other startups. So it can get a little ugly out there.
I agree. I mean, my first company with the fishing site, I didn't have a lot of money. We did raise money and I did tell a story that I did believe, in hindsight, was it a venture fundable company? Obviously not. But was it a good lifestyle company? Yeah, I bought it back and we're going to get to that with rescue time with you and how you came around. But I think I spent $50 a month on paid advertising or paid something with that fishing site, and it was word of mouth, and that's an SEO, which
Yeah.
I think I count to get there. But let's go back with your story. You come up with a story that you believe, but we're not sure is venture fundable. But you do get becomes venture fundable because of the story you tell, and you do get venture funding.
Yeah, I mean, I think our story, we had great growth at the time. And we had this neat story of quantified self and that sort of world was in the ascent. Lifehacker.com was this huge blog that was blowing up and this was a thing that was, exciting. And we had this notion of all this data that Rescue Time collects was going into the cloud. And we had the story of imagine how much we know about how people use technology that no one else knows, right? Because we are measuring all of our customers second by second attention data. And someday we will be the authority on this. And I didn't at the time have any idea how that could turn into money or a product or a business of itself, but it seemed like a really exciting, asset to have. So we raised money, and this is in 2008 when there's massive financial crisis. And so we were one of two YC companies to raise money in our class. The other one was Heroku. But I believe none of the other ones raised, and I don't think many of the other ones are still alive in any shape. But there might be a couple that managed to do okay. So yeah, we have raised money from True Ventures, who were outstanding investors and have continued to be outstanding investors. Big fans of theirs. Raised money with them. They're invested in my next company as well, Glowforge. So yeah, so it was great. So yeah, but it was a $1 million Series A. Chris Sacca, Tim Ferriss were also in that. So it's kind of a neat crew. But yeah, but by nowadays, $1 million Series A is almost a joke, right?
So I mean, crazy as that sounds. So you do Rescue Time. How long did you? I don't want to say survive, but you before you got tired because you left eventually.
Yeah, I left. It was interesting. We grew up for a while, and it was very in the early days of freemium, and we had a free product, and the growth was great. And we're wow, we got to figure out how to make money, and we introduced a paid product, and it didn't do great. And we gutted it out and got to the point where it was kind of cash flow positive-ish with a tiny team, and I really had lost faith. Right, I was looking at this, and I was this is not growing, and we've already spent our best ideas on this. We're looking at our idea whiteboard and big initiatives, big meaty things we could, bite off and tackle that would make this business successful. And we're do you guys have any ideas? Is this it? This is the thing that's going to get us to the next Google or Facebook. And so I had lost faith in it as a sort of venture sized opportunity. And maybe about 3 or 4 years in, and so, started sitting down with, Tony Conrad, who is on our board, and my co-founders, and being like, so, having candid conversations, like, do we all agree that this isn't going in a direction that we think is very exciting, and what do we want to do about it? And, I was, like, and, everyone's like, well, you just pivot, and like, well, we can't pivot to like social games, or like at the time iPhone games were big. We're like, why don't we be an iPhone game studio? Like, well, yeah, that's not a pivot. That's basically like a reboot. You have, at that point, like the investors didn't invest in that, and like the team isn't excited about that. And so, we had some pivot ideas that were closer to what we were doing. We're like, well, we could be a market research company. We could work like with Nielsen, but we didn't really love, but ultimately my two co-founders were like, we believe in this mission and we want to build this company. And that's where they wanted to be. And I was like, well, if that's where you guys want to be, and I don't want to be doing that, then I should hand you the keys to this, and I should, back away, with a handshake and a smile. So that's ultimately what happened is, I stepped away and handed the keys to Joe, one of my co-founders, and Brian, my other co-founder, is still there. And they just wait. And to their credit, like, over time, like changed the growth curve from like kind of flat to back, we'd taken it up and then like it kind of flattened out. We're like, oh boy. And then, so at some point after I left, started going up again, and they battled their way up and got it from like a, I don't know, 4 or 5 person company to, 15 person company. That's where it kind of stabilized again. So it was, just did not, like, I was, at that point had the go big or go home mindset of I wanted to do venture back big things, and this didn't feel like it. And it felt like, well, I don't want to be trapped in this. I want to have the opportunity to go chase big things. If I can't figure out how the thing's going to be big, I want to be somewhere else.
Yeah. I want to go to your next company, because I think it's an interesting transition. I know it had a technology feel. I always felt like you were going to a hardware company, and you can comment on that. But one of the things that I have, some people who I've been in some businesses with, and then there was a company in between, though, I want to talk about. Don't let me forget the LinkedIn thing that you flipped.
Oh, yeah.
Is this idea, Tony, that, some guy said to me, I said, well, this was a company, and we had thrown some money together and tried it. And I was like, hey, let's give it a go for 12 months. And, we're going to go for the gusto here. And if it doesn't work in 12 months, hey, I'm probably out of here. And I was just candid, right? Like, that's what we're doing. It's not that I don't think you can pivot companies. My God, I like took a company and then I bought it back and then grinded my way back and sold it. But like, I did that. But in this one, it's really a mindset. And I think you touched on that, which is, hey, look, if I'm going to do a venture thing and it turns into a dud, I'm out. Not like I'm giving up. It's just, that's what we're playing for, and I'm not in it for the pivot. And I think that's a real honest discussion. And I think it's a hard discussion. I also think it has a lot of self-awareness that you can convey to someone. And someone said to me, well, Brandon, that doesn't really seem like you're in it for the long haul. And I said, well, I'm in it for the long haul, but the bet we're making is on this 100x return. And if it's not that, then that's really my filter on this one.
Yeah.
And we all agree that that's what we're putting money in and raising money for. And if it doesn't do that, and I think VCs, they know that. That's why 8 out of 10 make it, and no one likes to lose money, but ultimately 2 hit and they make their fund. What do you think about that? Do you think that that's like a bad thing that we sometimes have that mindset, or?
No, I think you're right. It's really honest and candid. And as long as you have everyone around the table is heads up about that and talking about it. I've definitely heard bad actor kind of angel investors who, invest, 50, like all the investors I've ever worked with have been great. But I've definitely heard of angel investors like invest 50K and then, the company isn't doing well. And the company's like, well, we're going to shut it down. And the angel investor's like, what the hell? Like, and they're upset, right? Because they're like, and these are like small time angel investors who aren't doing enough deals to sort of diversify. And they're anxious about like, I don't want to lose that money or lose that 100K or 50K or whatever it is. Like, you owe me, effort to sort of turn that into money. And I think as long as you're sort of upfront about it on the front side is like, hey, here are the bets we're making. We're going to bet this, this, and this. And if these bets succeed, we can all agree this is going to be a pretty badass company. If these bets fail, we're going to all agree we're going to sit down and see, is there any other proximate bet that we think is a similar sort of magnitude? And we're like, okay, here's a pivot that we also think is a $100 million opportunity. But if we get to this sort of, if these whiff and we get to this point, we're not going to sort of force a pivot and go try to find like a $5 million outcome that sort of returns pennies on the dollar to investors and the entrepreneurs for the sweat that they're putting in, right? So as long as everybody and I was never in my early sort of entrepreneur days heads up enough to even think like that. But I think it's the right way to think, and you want to make sure co-founders are on board with that notion, or investors are on board with that notion, because and some people and there's also a mission thing, right? Is that like my Rescue Time co-founders cared about that mission in a way that I cared about it too, but I also at the time was very stars my eyes, go big or go home. And so they when it came down to sort of choosing between hey, do we want to pivot away from this mission where we think there might be more money? They're like, yeah, we don't really want to do that. And I don't think there were any great pivot ideas in our lap either. So that made it easier on them. But yeah, no, I think that's the right way to think about it and talk about it. And there's plenty of businesses that aren't venture sized, and those are great too. I hate, people get grumpy about the phrase lifestyle company, and like how wonderful is it for a company to throw off cash, to be a cash cow?
I think it's great. I mean, in my later years here, as much as I still have that, let's go to the venture deal. I mean, I don't know about you, Tony, but taking home $1, 2 million or $3 million a year in a lifestyle business seems pretty stinking good to me.
Yeah. Yeah, no, I think it's great. And it's a much more tractable problem than building a $100 million company, right?
Yeah, I mean,
it's way less risky, way easier to pull off. And, can be just as fun. But yeah, and I think, there is how do you want to spend your life? I think there's a lot of entrepreneurs, I hope most people trying to build those $1 billion companies are doing it because they love the market and they love building stuff. But I do know a lot of people out there who are gunning for dollars. They just want to be rich. And you've probably bumped in now in the Bay Area and other walks of life, enough rich people to know wealth and happiness past a certain point just have virtually no correlation. So don't kill yourself and sacrifice a huge swath of your life to make a pile of money. That's a dumb way to spend your life. Unless you're having a blast doing it, right? Which I always have, but a lot of people are really suffering to going through this stuff, right?
Well, I think so. One of the things, and I've stayed in the game for sure, but my philosophy's changed a little bit, Tony, in that here's what I say. Here, I want to go for, and this touches on a really important point I think you said earlier when you were doing the why comment on your pitch, which is you adjust the pitch to tell people what they want to hear. And look, I am I think, a good salesman, mostly because I'm passionate and I believe it, much like you, right? When you believe it, it's not hard. You just oozes out of you. But here's my, there's people who, and I won't be candid, take money from investors like this anymore, which is a really hard thing as an entrepreneur to not take money when you need money. But they say to me, well, we're going to build it and we're going to flip it. And I was like, no, I'm not going to do it. Here's what I'm willing to do. I am willing to try to solve a problem for a group of people that they're willing to pay us for, and not bet on a flip, but bet on fundamentally, there's a hybrid between hype and product market fit or solving a real problem, so that if the market does crash like it did in 2001, 2008, currently, that we have a foundation and everyone, and then this is, I don't know about you, but I hate this question. Tony, who is going to buy your company? And my answer is, I don't know, but here's what I do know. If you solve a real problem and you're making money and you're growing, someone will probably offer to buy you. We don't need to answer that question.
Yeah. Yeah. And I think that's honestly a fairly unsophisticated investor question. I think the right investor question is if this succeeds, how big could it get? Because of the power law and investment, all these investors really make almost all of their money on the one home run in their portfolio. So question is if it succeeded, could it be Google? Could it be Facebook? Could it IPO? That's the venture question. And the answer is we have no freaking idea, right? Like we're going to go into the market where we think it could be big, but no one thought Facebook could be as big as it was. I remember Andrew Chen has this just awesome post breaking down in meticulous detail how Facebook can never be more than $100 million company. And it was unshakable logic, spreadsheeted out to the nth degree. And Andrew Chen will laugh about it now, but it shows in Google, what did they got offered? What did Excite pay? Offered to pay a couple $1 million for them, or so all these companies are huge. People laughed off, right? They don't at the time make sense. So the answer is we don't know how big it's going to be, and let's go try to, like you say, solve a problem and make it grow, and we'll see where the ceiling is. And hopefully we've invested in a thing that has a very high ceiling, which is, I think, should be in the investor's main goal.
Yeah, I think you're right. I've always hated that question.
Yeah.
I wouldn't want to go down through my list that I have in my head of investors who have asked me that, who actually aren't that unsophisticated. They're super sophisticated, but they still ask the question and it still annoys the crap out of me.
It's probably an interesting sideways way of getting to who are you going to be threatening to, whose market will you chip away at? I think it's a good sort of thought exercise, maybe, I don't know, but yeah.
Well, how about this one while we're on the topic? Sorry, I'm just going to go a little bit off track here, but I know I can with you is, why aren't the big companies doing this, Tony? Why isn't Microsoft measuring the time that people do on their platform?
Oh God, yeah. These sort of, why isn't Google, as soon as they see you succeed at this, just going to clone you and put you out of business? Yeah, and I think it's and go ahead and ask that question retrospectively of why wasn't Expedia and VRBO making Airbnb, and why wasn't Excite making Google, and why wasn't MySpace making Facebook? How dumb is that question, with those companies at those moments, right? So I think, great startups are contrarian, and the answer is why people aren't doing it is because it's a stupid idea on the surface, and it's a contrarian idea, and contrarian ideas are the ones that win sort of outsized returns.
And my thing is, hey, if you're asking that question to just see my reaction, that's one thing. If you're actually asking that question because you actually are concerned about it, we should probably end the meeting now.
Yeah, that's another feels like an unsophisticated investor question. I do think good investors throw punches in those meetings to ask you annoying questions just to kind of see if they can rock you on your heels, see if how you react to sort of things, and how you think on your feet, and they're testing your salesmanship mettle. I don't know.
Yeah. But anyway, so let's go back. You leave Rescue Time, and because you and I probably go off on that and probably get myself into trouble. On air. And I do love investors, by the way. I was a VC, and I think there's a lot of them. But of course, as an entrepreneur, we all are going to be annoyed at some stuff, and quite frankly, they're annoyed at us. God,
the pitches they have to endure. I can't even imagine what they have to sit through.
Or the answers we give in board meetings after they're like, no guys, that doesn't work. Or ladies. So you leave Rescue Time, and I think you did I was actually I think you did the LinkedIn, I call it the LinkedIn flip. I don't know if that's the right thing. You did this thing. I was actually so impressed because it felt like you came out of nowhere, and the next thing you're like, yeah, we sold this thing. What was that?
Yeah, it was a weird kind of side project. I was working with a friend of mine, Adam Doppelt, who is one of the co-founders of Urban Spoon, who's similarly in a wondering what to do with his life and who to do it with. So it was kind of a co-founder dating thing. And we, Adam and I have since, remained great friends and whatnot. Never started an actual forever company together because we couldn't land an idea. But this is an idea we said, well, just to get to know each other, let's work on this. And the notion was the press called it hot or not for LinkedIn. But what it did is basically put two coworkers, it would hook up to your LinkedIn profile and then put two people that you've worked with in the past in front of you and say, who would you rather work with again? This person A or person B? And we set it up as this kind of game where people who did it would answer this question literally dozens or hundreds of times. And the notion is that if you answered 50 of them, we will show you how you've done in these duels, right? So if you answer 50 of these, we'll say, Brendan, you've won 40 duels out of 50 or something like that. Or, because like it's kind of, pulling on the thread of like, we all want to know what our coworkers think of us. And so we represent ourselves as the company that could tell you that. Like people have like seen your face next to another face they've worked with and chosen you or this other person. And are you winning or losing those duels? It's called Cubeduel was the name. And so we had just millions of these duels happening. And like, we like had fun stories of like Friday night, we're hitting LinkedIn's API cap and we're like pouring through our network, trying to find anyone who knows like an executive at LinkedIn who can sort of, make a weekend phone call to sort of get our cap raised. Cause our whole, site was down at this time where we were growing in this very viral way. So this was a like, very purposeful kind of viral marketing stunt that worked really, really well. It's a good, when you think about viruses, like, and obviously we're all thinking about viruses nowadays, there's a notion of immunity. And one thing that we realized pretty early on is that everyone we infected with our sort of virus, right? It's this like word of mouth is spreading. People were tweeting about it, blah, blah, blah. Everyone who used it and tried it, like it was incredibly fun for about 20 to 30 minutes. And we could pull some people back a little bit here and there, but for the most part, once you tried Cubeduel, you became immune to Cubeduel viral sort of outreach, right? So we saw this thing racing up in this just sort of like asymptote kind of way. It's just amazing. But we also knew that it had sort of a shelf life. So when we, started getting press about it and did the press drum kind of thing, got on TechCrunch and a bunch of other things, bunch of people copied us. I mean, the clones, like, the number of sort of career-oriented sites that were doing this was huge. Because the tempting thing was, or the exciting thing from a business perspective was this reputation graph, right? Because you can imagine when you hire someone, you really don't know. Like you have their resume and it looks pretty good. You have their references, which they hand fed you, and like those are pretty good. But what you don't know is like for people who worked with them, would they work with them again? And like, if we could tell you that every time this person's face comes up in a Cubeduel duel, 90% of the time someone picks the other person, that's like an interesting signal for you, right? From a hiring perspective. So the people who ultimately reached out, we had a bunch of people reached out to us, want to fund us. One wanted to buy us, or a couple wanted to buy us. And they were all kind of interested in that angle. So we ended up selling it to a startup and a VC, sort of were joining forces to put the money together to buy it. And then we helped work with them for like 3 or 4 months there, kind of a little kind of mini earn out, and then went our merry way. So yeah, and that was the whole thing, was like maybe a month of effort on our part, and then 6 kind of nail biting weeks of working through the legal paperwork, right? When it's pretty fun when you're like, oh yeah, we just like put this thing together and it's a big success. Then you start paying legal bills to work through a deal. And during the deal, we're watching, and the customer, the people who are buying it, they're watching the same analytics that we are, but they're seeing the growth start to slow down and start to top off. And we're getting down to the point where we're signing paperwork and whatnot. And like, are they going to back out of this deal because they're watching the growth? And we can, say, well, the growth is slowing down a little bit because we've been focusing on this deal instead of growing it. But like, they knew how things were going. So yeah, so ended up selling it okay, and worked with those folks, and they ended up building a good related business, but the asset, the sort of Cubeduel asset, became this sort of virus with immunity that wasn't terribly interesting, other than the data sort of we had acquired, which I think was interesting. But yeah, it was a wild story when you're like, oh, you have $10,000 or $20,000 worth of legal bills racked up for this sort of acquisition that like we're still going to have to pay if it falls through.
It's a good lesson though.
Yeah.
But I think there's also a maturity level there and understanding, because it's easy to start convincing yourself when you see that thing go up, and not what I think a key thing you said there is watching the analytics and understanding that you weren't getting the virus with immunity. Is actually, I don't know if you've like coined that phrase, but it's really good because it basically you get worn out, right? It's a novelty almost. Yep. And being able to recognize that and not convince yourselves that you would go take a check from VCs and then wind up in this, again, non-fundable in theory company that appeared fundable at the moment.
Yeah. Yeah. I mean, I think, and there was and Adam and I had worked, we'd both been in Jobster back in the day. And so we'd worked in the job space before and hiring space, and like, we just didn't have a lot of love for that space. I think there's something there. And again, I think this company that bought us ended up building a big, I mean, they raised a series C, D, or E, or I don't know. Anyway, they've raised a bunch of money, built a big company, successful, good product, blah, blah, blah. So there's definitely money in the hiring software game, but man, it's a hard, ugly space. It's like dating software, right? Like it just feels like trying to matchmake in the jobs world and the dating world is a hard business.
I think they're still trying to figure that out. But you go on from that, and then you start another company, which was a hardware company out of Seattle. You went back to Seattle, I guess, or you're still in Seattle.
Yep.
And that was I remember you doing all these like cool laser cut things, but I actually never really understood it, to be honest with you, because I wasn't in the space.
Yeah. Yeah. No one understood it. And you know, like any self-honest entrepreneur, I don't think we understood it as much as we do now. Right?
And then I almost feel as dumb because I was like, Tony's putting out, I remember you did this like super cool thing on a laser cutter for a computer cover. And I was like, I want that. Like, yeah, I'll buy that from you, Tony.
Yeah. Yeah. And it was, you know, we had, you know, the whole maker movement, you know, with 3D printers and whatnot, it sort of, you know, ascended and then declined. So they were in the sort of way past the hype, you know, hype curve there and into the sort of trough of sorrow where 3D printing was kind of looking kind of lots of competition, really ugly. So really liked that maker thing. And I'd been a woodworker for chunks of my life, and I was artistic and creative, and I love that stuff. And so I started playing around with 3D printers, and you know, my co-founder, Dan, who's the CEO, still is, he had been fussing with 3D printers. He'd actually made a Kickstarter, a board game on Kickstarter called Robot Turtles, which is to teach kids programming. And one of the things you learn late in these sort of experiences, like, oh, wait a minute, like all of my customers are nerdy software engineers with kids, with new kids, right? And so my customers are rich, right? They have tons of money. And he's like, he had been really scrappy about this and put together this board game that was really just paper and cardboard, and selling it for like 25, 30 bucks. And he realized, like, these people don't care if this board game is $30 or $100. So he's like, I need to make a higher end edition that these people who don't care about money would happily buy, that isn't cardboard and paper. So he started trying to figure out how he can make pieces. You know, if you've ever heard about manufacturing, it's like, well, there's, you know, injection molding and plastics and this is and that. And he's like, wow, this is all really complicated. I'm doing this on a relatively small scale. I need to figure out manufacturing on a really small scale. So started geeking out on 3D printing and realized that was crap from making actually anything nice. And, you know, a friend of his had said, hey, you should really check out laser cutters. They're like, if you go to maker spaces, that's what gets used a lot because they're way more approachable. You can do things out of like, you know, wood and plastic and leather and like really make beautiful things, where with the 3D printer, you get kind of this gloppy sort of mess. You know, now there's obviously higher end technologies on 3D printing. So he'd gotten excited about laser cutters, and he ended up buying a $10,000 Chinese laser cutter to make the Robot Turtles Laser Edition, which I forget what he sold for, but it was more money. And it was a very good success for him, paid for the laser cutter and then some. And at the time he'd done it through Kickstarter, so he got all this kind of crowdfunding knowledge. So he invited me over and said, Tony, check out this laser cutter. You're a designer. Do you think it's cool? And that kind of, you know, I very quickly got the bug of like, this is like a superpower, right? You're like cutting things out of wood with a goddamn laser beam, which between like, you know, being a science fiction nerd and a woodworker felt like, you know, basically the coolest thing I'd ever done. But it was also very difficult. Like it's this, you know, $10,000, you know, old Xerox copier sized cabinet thing that smells bad because it's vaporizing things. The software is Windows only and proprietary. You know, it's just this complicated, you know, software and hardware mess. And we started talking about the notion of like, well, and this is, you know, credit to Dan. Dan was like, what if we consumerize this? What if we said, let's make this thing as dumb from a hardware perspective as possible and put as much of the smarts in the cloud. So the notion was, you know, these things have like firmware on them and they're basically their own little computers and whatnot. And you need a Windows computer to hook up to them. But what if you loaded them up with sensors? So we have cameras and temperature sensors and all these other things in there, and made all the software in a web browser, which at the time was a pretty contrarian bet. You know, the same way that you look at like Figma. Figma is replacing Photoshop for a ton of people, and it's in a web browser. It's an amazing piece of software. So we, you know, didn't really know if there was a market for that. The entire domestic, or I think the entire laser, like worldwide laser cutter market at the time was like $100 million. So tiny, dinky little market. So we went out and tried to raise a little bit of money on that. And like, we were all credible entrepreneurs. Our third co-founder was this guy who like, you never heard of because he doesn't want to be heard of, but you know, he built and sold a $100 million company. Really very successful, was a CEO for a while, deeply technical guy, made, you know, plasma cutters in his garage for fun, from scratch, like just super genius kind of, you know, but like really kind of polyglot, you know, and great human being to boot. So that, you know, the three of us weren't really sure like how we could pitch this as a big market, but we thought there was some potential there and wanted to explore it. So we raised a little bit of money, and Dan and I were, you know, talking, you know, about crowdfunding as a notion of like, well, this is like, you know, we talked earlier about as entrepreneurs, we want to prove these ideas before we, you know, commit our lives to them. And we saw crowdfunding as this way of, we can go see how much the market wants this. And if we whiff on the crowdfunding, well, no one's going to begrudge us shutting this thing down. And if we home run on the crowdfunding. So we were like, well, you know, let's do this. So, you know, we did a fancy video. We ended up not doing Kickstarter. We built our own crowdfunding software from scratch, which I think was the right move. Seemed weird at the time.
Why was that the right move, by the way? Because that doesn't even make sense to me.
Yeah, no, I appreciate. Yeah, there's some strong conversation on it. I think, you know, one thing is that Kickstarter at the time, A, took a reasonable chunk of money out of it, which I think is a dumb reason to not do Kickstarter. But B, didn't really have the tooling and analytics for us to do the things that we knew how to do, right? So a lot of things that I'd done in my life around sort of growth and like things like A/B tests and, you know, things like viral marketing. And we wanted to have like a built-in referral campaign where if you bought a Glowforge, we'll give you, you know, we'll give you a special code, and if you share it with your friends, for every friend that buys a Glowforge, we'll give you $100 off, and we'll give them $100 off too. And we wanted that built into the whole experience.
The whole viral cycle.
Yeah, double-sided. I mean, they call that a kind of a double-sided viral sort of loop. Dropbox did it to really good effect. It's a hard thing to pull off, but with $100 being the carrot, like really, really worked for us. And then you think, like, imagine you as a podcaster, you have an audience. You say, hey, I'm going to put my code on my, in my podcast. So we had people who had like, you know, meaningful followings or even small followings who put out their code, had 20 people buy it, and they got a free Glowforge. So like it was pretty darn motivating for people. So we couldn't really tool that into Kickstarter from a software perspective. Plus they took like, I don't know, 15% or something. And wanted to do things like A/B testing, wanted to have really like tuned analytics on how ads were working, et cetera, et cetera. So just couldn't do what we wanted to do. And, you know, it used to be that e-commerce was this really challenging thing of like to build a website that would sort of take a credit card. And like now in the world of Stripe, you know, with some hard hitting software engineers and knowing the right tools to use, this was kind of, you know, it was distracting, but not nearly as distracting as you might imagine to put together this throwaway software that we're going to use for 30 days and then, you know, throw in the trash can at the end of that. So that's what we did.
How long did it take you?
That's a good question. I think probably all in like maybe 30, 45 days.
Would you do it again?
Yeah, I would definitely do it again. I mean, I think like, you know, this stuff it's pretty surprisingly easy to do. And I think we took some wrong turns too. Like if I was going to do it again, I could do it faster.
Right.
But yeah.
Okay. So you build your own software. Sorry. I just was interested in that. And it makes totally sense. I mean, they really don't have, if you're a marketer, it doesn't have A/B. You can't build the viral loop that well. You got to create it outside, and you got to put a bunch of duct tape around it.
Yep.
And it is painful. So
we had one other sort of angle on that we thought that there's a spectrum of like crowdfunding, which is like this. I'm an entrepreneur. Join me on my plucky entrepreneurial journey. Together we will build this thing, and maybe it'll work, and you'll get this thing. And we were selling a piece of hardware that was going to be $2,000 to $6,000. I don't know where our prices landed. I think it's around there, $2,000 to $4,000 when we launched. And we wanted a level of credibility that I don't think Kickstarter could provide, because Kickstarter had this very like, you know, we don't know what we're doing. We're plucky. We're in this together vibe. And we wanted to present more like, actually, this is more like a pre-order. We're pretty much done with this thing. And it's almost ready to ship. It's just really a formality. We got to dot some I's, cross some T's, and we'll be done. And for people to fork over $2,000, that's a big, they want to bet that this is actually going to land on their doorstep, right?
Right. That makes sense. So you run this campaign and
yeah, and we ended up raising $27.9 million, I think is the
what?
number.
$27.9 million.
Yeah. And I love to say that we were expecting that and we had it all planned out that way. And it was just, everything fell into place. But we, at the front side of this, I think we said like, well, if we make 2 million, we'll be like, we'll keep going. If we make 5 million, we'll be like high five. That's our home run. That's our home run number. Right. So this was like beyond all expectations by, 5X plus. It was pretty crazy.
So you basically have 27.5 million. What is it? 27.9?
Yeah. About there, I think.
$27.9 million in sales in what? 60 days?
In the span of, I think 30-ish days. We did a 30-day campaign. And at the time, I don't know if it still is. At the time, it was the largest 30-day crowdfunding campaign in history. And that's obviously a huge part of that is by virtue of the fact that it's a $2,000 to $4,000 product. So, tens of thousands of customers equal that much money.
Yeah, but that's still, how did you, well, I guess it was that virality, and that's probably a whole nother podcast episode, but that's still a lot of sales, Tony.
Yeah, no, it was off the hook. I mean, I think there's credit to the viral thing. I think was big. The video, like I think we ended up spending $150,000 on that video. So wow. Like, this was not like us running around the video camera saying, hey, look how cute we are. We're entrepreneurs. We're here to make a cool thing. It was like, this looked like a commercial. And we had an outfit out of Los Angeles fly up and film this. We did crazy things like they showed up and immediately went to IKEA and bought, I don't know how many thousands of dollars worth of furniture, brought it into our sort of big sort of, office space and set up this like cool.com office because we didn't have one of those. And like, made it look all cute. And then like after the thing, I think all that stuff got returned to IKEA. So the video was, I think, really, really powerful. We also did the thing where like, and as because we were veterans and could raise a little bit of money on the front side of this, we actually raised money with the intent of spending it on ads during the campaign. So that's the thing I think a lot of people don't think about with crowdfunding is during that 30-day campaign, you have this special window where you have this, time-sensitive price that is going away in 30 days. You have all this press that is happening because it's a crowdfunding campaign and that's all hot and that's going away in 30 days. So you have this moment where your ad dollars are incredibly effective where they afterwards were not nearly as effective when you're in these sort of post-crowdfunding lull. So we, as we saw this successful, as like, once like kind of on our theme of like, start advertising once you know you have product market fit. Well, we didn't know we had product market fit, but we knew we had pitch market fit, right? This pitch was working. And so we started pouring gasoline all over the little fire that was smoldering there and could not spend money on Facebook fast enough. I mean, quite literally, like Facebook, when you sign up as an advertiser, they keep you capped to make sure that you aren't like doing shifty stuff. So we were just constantly calling Facebook, like saying, can you raise our cap? Can you raise our cap? We were spending tens of thousands of dollars a day on Facebook ads to really, really good effect. I mean, it was just incredibly fruitful for us to do that. And meanwhile, you look at the crowdfunding campaign, and it's this sort of self-sustaining like frenzy where like the numbers running up. So all of a sudden, like major press outlets are like, look at these numbers running up. And we're like, yeah, we're kind of juicing those with ad dollars, but we don't need to talk about that. So it's this really sort of flywheel thing that was incredibly powerful and effective, for those 30 days.
So that's incredible. Now what, because I want to bridge the gap between how you go from Glowforge now back to Rescue Time. But how, like, you were there a few years. Did you grow tired, or did you? I feel like as I've known you, you're such an easygoing guy, and as we're talking here today, I'm like, God, I wish I talked to Tony more often. But I feel like you and I talk in like these spurts, and when we talk, it's not like it's just like we left off where we did it. I think that's a testament a lot to how easygoing. Maybe we're a match that way, but what happened there with
Yeah, I mean, it was like I think crowdfunding is an interesting thing because your success is dependent on how optimistically you present yourself. So like, we really like, I mean, you've seen this probably with entrepreneurs a lot, is like, you don't know what you don't know. And so we went in this like saying like, oh yeah, we're going to be shipping units super soon. All these product things, like, we have some of these features baked, but some of them like are still speculative, but we'll figure those out. And like, how hard can they be? And even though we had a bunch of hardware expertise on the team, we were, to say it lightly, surprised at the complexity and difficulty of some of the things that we were tackling. So, we promised in the campaign, units would come out pretty early. And I think, customers started getting their units literally 18 months later. So it was, that's a hard time to be at a company. And, I would say to our company basically said over and over again at any time, like, here's the button for a full refund. So we didn't take anyone's money hostage. We were adamant that like, and we didn't touch that money. So we immediately after
Well, that's an important thing. I don't overlook that. You kept the money in a separate account.
Yep. Yeah. Yeah. And that was like, that was kind of, don't touch that. And, again, on the heels of this, on the largest crowdfunding campaign in history at the time, 30 days, we went to a bunch of investors and said, hey, we're thinking we might raise some money for this now. And like, even then we had plenty of investors like, I don't see it. I just don't understand. It cuts things out. Laser beam, is it like a craft box? What, I mean, like you said, and I was the same way of like, who is the target market and why is it big? And like, I still have trouble answering that question, but it's huge now, wildly successful company. But I, it was a hard year and a half, like, sort of doing our best to try to get back to where we were, putting this product in front of customers, and to make sure we didn't, like, we kept seeing these other crowdfunding campaigns, like, finally present their product to the customers, and the customers like, what is this crap? Right? Because you have all this pressure to move quickly, and like, we built this beautiful commercial, but that doesn't mean the product's good. It just means the commercial's good. So we had pitch market fit, but like big question mark on product market fit. So it was brutal. So we, basically, I was there for just shy of 4 years all in, and, got the product to market, got it so that, consumers loved it. And that was like, to me, like, as a product designer, and I was kind of involved on the design of the software experience, and only sort of peripherally involved on the hardware experience, other than just expressing opinion about aesthetics and whatnot, because I don't know anything about hardware, and Mark was really smart about it. So the product got into customers' hands. The software experience was great. We had a team that was growing, and kind of as an early stage person, felt like my value was sort of declining in terms of what I could bring to the table. And the things that I enjoyed most were kind of behind me rather than in front of me. And, felt really proud of where we were.
So you leave, but just for listeners out there, when you leave, there's all these other things that probably 6 other podcasts, if not more, about stock options vesting and all this crazy stuff. So are you able to leave? You're able to leave here after 4 years with something that at some point is worth something stock wise, or something beyond your salary? Or do you just get cashed out and say, thanks guys, I'm moving on?
No, very, very different. And like, my services business is, up in Alaska. When I sold out of that, it was like, I sold, my ownership to my partners for, cash money, and I'm out. Or some sort of, plan where I get paid X amount over 24 months or something like that. When you, with startups as a founder, which is very different than being, employee number 1 or beyond, you get sort of founder shares that have a vesting schedule. So, you earn those shares after the first year every month up to 4 years. And then, you're fully vested at 4 years. And usually they'll sort of issue more shares and do other things to make you stick around. So at that point, I had sort of accumulated most of the ownership in Glowforge that I was sort of on paper scheduled to do. If I'd stayed, it probably would have done more, stocky stuff, who knows? But yeah. And so those are, I think technically, and I don't pay as much attention to mechanics as I should, but they're slightly different than stock options in that I don't have to pay them. And there's the 83B. And there's also, if you're ever going to be a founder instead of an employee, either way, you should investigate how stock options work. But for me, it was a very friendly, like, I have these options. I paid for them at the beginning of the company for a very small sum of money. And they're mine. And so, but now like Glowforge having raised $27.9 million in crowdfunding, I think at this point, $60 million in venture capital, like the paths for Glowforge, the who wants to buy your company question is no longer an interesting question because the answer is no one can afford to, right? The valuation of Glowforge is some meaningful multiple of the $60 million that we've raised. So when you're like, worth say hundreds of millions of dollars, like you need to sell for billions of dollars for the investors to be happy with things. The very good news is Glowforge has done very well, and I think has a bright future. I'm very, very confident that all of the investors who are like, I don't really see this as a very big market, are going to put this on a list where they said like, here's the one I should have invested in. They all have that list, right? And Glowforge will be on that for a meaningful pile of investors. It's doing great, but yeah, it was a wild thing, and first hardware experience, obviously super crazy.
So you check out of this one, and then you're figuring out your next move.
Yeah, I mean, like this is you know about this, and I like talking about it because I think people don't talk about this stuff enough. But my 6 months after I left Glowforge, my wife suddenly passed away. She was fishing up on the Kenai River in Alaska and had some freak cardiac event that killed her instantly.
Which has absolutely shocked me, by the way, just so you know that, because I sent you that note. And
Yeah.
I was like, well, we have a mutual friend, JJ. I think JJ said something. I was like, what? I mean, you and I don't talk, but when we would talk, it was like, I felt like, Alex was there. So really saddened to hear that. It was
It's a wild thing. I mean, like you think, I mean, in your 40s, like, I mean, if you're lucky, and I was like, the only people who've died in your life are old people who were you were kind of half expecting to die pretty soon. And when but these people dying in the middle, in sort of the prime of their life. Alex was, 48 and, absolutely healthy, super active, ate well, clean living, like just a freak thing. And like super grateful that I'd left Glowforge and was kind of in sabbatical mode because I got to have 6 months, with my wife where I was present and like a good husband. And when I'm in startup mode, I was and she was a great, wife to a startup founder, and that she was very supportive and very generous and giving, I was in startup mode. But you're not a great husband when you're in startup mode, right? You're like, walk in, you're like, hey, did you pay that bill? Is there food in the fridge? I'm going back to the office now.
I call it absolute focus. And I think, Tony, to your point, I just want to, I say that to entrepreneurs, everyone talks about your team, right? Your co-founder. I'm like, your team is at home, and your partner, whether that's your wife or significant other, like at the end of the day, I don't think being with people like us is easy.
No. Yeah, no, I think they're like, and Alex was fabulous at this, and that she was like, if I wanted something, if I was focused on something, if I was passionate about something, she wanted me to have it. Like she was supportive in a way that I think a spouse should be supportive. And I hope that I did almost as good as she did sometimes, but I know I didn't. But I hope, maybe will be sometime in the future. But yeah, it's a thing that, I mean, I don't think a lot of people can stomach that. And a lot of people, can't. Alex could like hang out alone at the house for 3 nights in a row if I was like at the office, and she'd be fine and like, maybe a little bit lonely, but she was, had hobbies and had friends and was willing to be like, okay, like I can do this. And we like, there are times at Y Combinator where I'd live down in the Bay Area for 6 months, going through YC and then fundraising after, and she'd fly down every weekend, and we, she would make it work. Right. And I think a lot of people are like, justifiably want more out of a marriage than that.
Well, yeah, I think it's all. I don't believe in all this. What normal is. Yvette and I've had the same life. Like, relationships. You gotta, in my opinion, probably get in trouble, maybe, but your relationship is something that exists in addition to your already existing life. And if it is your life, then it absolutely, it won't work.
Yeah. So, yeah, I think, like everyone has a different amount of relationship overlap that they want and need. And I think it's really healthy to have, separate aspects of your life. But you can see that disconnect where someone wants to have this full overlap. We adore each other, spend every minute together. And this other person is like, well, actually my career is really important to me and I'm going to, be gone 50 plus, 60 plus hours a week. And that doesn't match. So like, yeah, I think everyone has different sort of needs and appetites. And again, that's another thing that, just like I could go back to 20-year-old Tony and tell him all the dumb things he thought about startups. I could go back and tell him a bunch of dumb things he thought about, marriages and relationships too. Right.
But the thing we're talking about, which is terrible that happened, but it is really, I think you're referring to, and this happened to you during this period, really, thank God in many ways that the timing, everything happens for a reason, I believe, but you're on this search after you leave. And I think one of the things I've always admired about you, and I believe it too, and I tell my friends who sometimes can't get their head around it, is after you're done a stage of your life, like whether it seems to me you're really around 4 years or 5 years is stages. For me in startups and companies, it's been around 7 for whatever reason. I can't tell you what that is. But I absolutely believe that after you are done any major stage of your life, and especially in a startup where you're going into these insane hours and mental focus and all this crazy crap, is you got to take a break.
Yeah.
And I think that's what you're referring to. So during this break, Alex passes away, and that sort of changes, obviously, the trajectory of a lot of things for you.
Oh, yeah. Yeah, it's a massive reset. And I think, and I don't know, Stephen Colbert has this great interview with, I think, Anderson Cooper. Stephen Colbert lost his dad and 2 brothers in a plane crash when he was 10. And he describes it, he says, he's like, it's weird wrapping your head around the notion of being incredibly grateful for something you wish never happened to you. And that's how I try to think about, Alex's death, of like, God, I wish it never happened to me. But like, I've really tried very hard to take it as an opportunity of like, this is a wake up call of like, how do I want to live my life? How do I want to treat people? Like if I'm ever married again, how do I want to be, a husband? Because a lot of that stuff I was just kind of, coasting in the default sort of channels for those things and not really being mindful of like, actually, this is really finite and fragile and any of us could die at any time and certainly will eventually. So are you doing what you want to be doing right now? So it's definitely a heck of a wake up call.
So, and the other thing I think you, and actually I know even before, and we skipped over it, but there are some times even when you took a break from, I forget, Rescue Time, you and Alex took a year off and traveled around the world. And I always saw it as, to be candid, Tony, I'm always like, how the hell is he doing that? Like, but it was never like you were having amazing experiences, because I would follow you and you blogged, I think during that year, you and Alex were traveling. It wasn't that you were living at the Ritz-Carlton or at Amagami's around the world, but you were having these incredible, rich, fun experiences that it didn't appear to me cost a ton of money, but you were very clearly taking a moment to get your mental, I don't want to say mental health, because
I think mental health is right. Yeah. I mean, like, it's like to recapture your energy and your sort of pizzazz and yeah. And so like some of this stuff is a little bit scarring, right? When you get on the other side of these things, like, you're exhausted, maybe you're hurt, maybe you're, like anxious about your place in the world. Maybe you're anxious about what happens next. Like there's mental health things there that are very real and different for everybody. So yeah. And I don't like, we talk about these acquisitions and stuff like that. And I joke that like, if I had just gotten a job at Amazon, Google, heck, you name it, like I would have done better financially than I had. I think the difference in my life is I had these sort of like spikes and troughs of sort of effort and intensity. And I think one thing I like carried through all of it is like, live cheap, is that like you meet these people who have, 400 grand a year burn rates where they literally can't, their bank account declines if they aren't making $400,000 a year. And it's just this bizarre thing. And you're like, it is a superpower to not care about expensive things. And then if you don't care about expensive things and you live in our world, very quickly, you can do whatever the hell you want. Yeah, I think like, and people get attached like, well, I got to have a Tesla and I got to have a this, like, and I got to live in a house this big and I probably need a vacation house and a boat. I need a boat. And before you know it. And like, every time you get a new paycheck, you're like, well, I should live a little larger now that I'm making this much money. And like, man, that's just, it's a drug, and people get addicted to it. So yeah, a lot of that stuff was definitely not the Ritz-Carlton, but cool stuff to be doing.
It was awesome. And I agree with you. I think you feel like you've got to ramp up. I have tended to be like you, Tony. I knew what I wanted. I wanted to live at the ocean. I knew I wanted to live in Silicon Valley or near it. And I got lucky, and made that happen. But for 3 years, we didn't have anything on our walls. And eventually my wife's like, hey, we got to get stuff on our walls. And I was like, I don't want any crap. Like, we moved from the East Coast. We actually got rid of everything. Can we just like stay here? Because it feels like it did back in the early days when Yvette and I were living in a 600 square foot house at best with no heat. But so I appreciate that. But let's go back, and you're 6 months, Alex passes away. Then you took some more time, rightfully so, I think, you traveled a bunch of places, right?
Yeah. I mean, I was kind of like trying to figure out, like, I did this sort of like, I was trying to be contrarian about grief, right? Is that like all of my instincts said like curl up on the couch, eat ice cream, drink,
Right.
like all the things that you like wallowing in grief. And I was like, I'm going to do the opposite. I'm going to live as healthy as I possibly can, food and exercise, religiously. And this is kind of like this duty to Alex that I felt of like, I owe her not squandering this thing that I get that she doesn't. And I also said, like, I'm going to be ridiculously social. Like anytime like a friend says, hey, I'm checking up on you, I want to see you, do you want to hang out? I'm like, yep, name a time. And I joke that I had this like comfort calendar that if a friend said, hey, can we hang out? I'd be like, well, if you're willing to comfort me with someone else, I could fit you in on Tuesday, but otherwise you're probably looking at early next week. So grateful that I had this pile of people who were sort of keeping an eye on me. And I would say yes to literally any human who wanted to check up on me and spend time with me. The answer was yes, let's find a time.
Well, and I congratulate you on that, because what you did, Tony, I think super hard.
It was hard, and I owe a lot to my friends and Alex and the timing of it. Right, I was in a place where I didn't mention this, but like my co-founder at Rescue Time, who was a good friend, died 2 years earlier of cancer. That was my first experience with death. But then Alex and I got to sit down and talk about like death and this realization that we could die, and that and like we talked about each other's deaths, and so like I got a chance to like think through, like I got kind of a dry run with a friend, not like my best friend, but a good enough friend, like, holy shit, this hurts. And then I had this 6 month of like being able to like hang out with Alex and be like a good husband to her. And so I really felt like you say, like the timing was just like, it was awful. And then it wasn't like 30 years later, but I think when I look at like, and I, hung out with like widower, support groups, kind of seeing what that's like. And like, I realized like, how lucky am I that Alex died in her favorite place on the planet, suddenly and without pain, was an organ donor. There were EMTs right next to her when she died on the river. So they kept her heart alive so she could donate organs. Like it's this amazing thing. And then I meet these other widowers who like, I watched my wife, deteriorate of brain cancer over 6 years. Or, people who like watch their spouses like get hit by a drunk driver. And now they have this person in the world that they hate that took this person from them. And I had no one to hate, right? I have no one to be outraged for. Like, I literally could not have written a better death for her other than 30 years later, would have been better. But yeah, so I think I got like an easy road compared to a lot of people. And I'm so super grateful.
Positive way. But I do remember reading that J.J. Bonsack passes something, and I was working really late that night. And I actually had shifted on purpose my life to a more morning thing, really. And I just remember, Tony, and I don't relive it because certainly you don't, but there was just an enormous sadness that I had, and I felt so bad for my friendship with you, because mainly I had gone and done some things in another market that I was like, I'm not going to be on Facebook. So I lost this touch, and I was like, oh my God, I in many ways, although you and I aren't the best of friends, I've always felt like we've been connected, because it was always like, oh yeah, I see you in class and we talk. And it's like, we had this entrepreneur thing together, but it did make me reflect too. My grandfather shot my grandmother and killed himself. And that was a moment in time when death sort of changes your perspective in some level. And then I think what hit me is I remember having dinner with you and Alex in Alki Beach, I think it's
Yeah,
called.
Alka Beach. Yeah, West Seattle. Yep.
One night, and I remember exchanging some stuff with Alex on the nonprofit stuff, and I was like, Tony and Alex were so wonderful, and I just felt this enormous sadness and reflection, like, oh shit, maybe this is what happens in your 40s. Like, what happens if that happened to Yvette? Like, am I going to, I went back and read your posts and all this stuff. And I was like, Jesus, man, Tony's like setting a bar here that I just don't know that I could handle. But, anyway, the good news is I think everything you've said is so positive, and you had these 6 months but you did extend it. I think I say extend it. This finding yourself sort of extended itself another 6 or 8 months until you found out where you are now, right?
Yeah. So I mean, before Alex died, we were kind of talking. I was like, okay, I'm going to start ramping up the search and trying to figure out what's next, and who knows what that is. And we were talking about like geographically, what would happen if it was somewhere else, and then she dies, and it's like, okay, well, screw my career. Like, that is literally the last thing I want to focus on right now. I don't know if that's good or bad, but yeah, I just kind of said I'm not in career mindset for another. I think it was another, year and change before I started. Like I hung out in the house that she and we remodeled together, and decided like, okay, I should probably get out of here, and got an apartment in downtown Seattle, and sort of, like started kind of just building a life. And like, you figure out new friendships of like, a lot of times you have couple friends and you're like, wait, are we still friends?
Right. Like, how's this work?
Yeah. I mean, it's just a bunch of things to kind of figure out. Right. And to figure out, like, I don't know, the length and shape of grief and how to wrangle that stuff. And so yeah, so once kind of started thinking about what to get back into. And I think my career has been very undeliberate, where a lot of times, like, it's kind of opportunities. Like, I'm sort of sitting around at a time when I'm sort of thinking about what's next, and an opportunity hits me and I'm like, yeah, okay, let's do that. Rather than, I think, a more deliberate mindset of like, what market do I want to be in? Who do I want to work with? Like, it's generally kind of opportunistic. And this new Rescue Time thing was in that camp too.
Yeah. So what happens here? Because this is really full circle. Rescue Time survives. Your other co-founder unfortunately passes away of cancer. I assume the other co-founder had been there. And you did travel. I remember, I don't know where you went, South America and around the country. I think you were in Arizona. And then does Rescue Time come? How's that happen again?
Yeah. I started getting a little itchy, once I'd sort of settled my life in Seattle, and like, I always loved travel, and like, I don't know, like, you're like, how do I travel alone? And so I was doing some solo camping and some solo traveling and trying to figure that out. And so all the co-founders had left Rescue Time at this point, and a guy was running it, who's CEO, a good guy I've known for years and years. And he reached out to me and said, hey, I think I'm going to leave Rescue Time. And I was like, well, what's going on? And he's like, well, I've been running it for, a couple, 3-4 years. He'd been there for like 7 or 8. And he's like, growth is kind of stalled. Like, it's doing okay. Like, it's, cash flow positive, has tons of money in the bank. Like, but I'm just kind of out of ideas and energy, kind of burned out. And I was like, well, what is the board going to do? And he said, well, he's like, the board isn't sure, right? Like, they're VCs and they're looking at this, like, it's true venture. So again, they're like, I think some of the most stand-up VCs in the business. So they're like, listen, we're going to support this company, forever if we need to. But they're also like, should this company keep going, right? Like, it's not growing super fast. It's 10 to 12 years in now, 11 or 12 years in. And we don't see a path to really meaningful growth. The market isn't what we thought it was. Like, should we find a home for this thing? Do we have a new idea? What do we do? Or do like, and like, do we shut it down? Like, do we say like, all these, fine people who work here, like, could work elsewhere where there's like good growth opportunities? And if Rescue Time's kind of, this flat thing, like, is that where these people should be? So they're kind of talking like, what should happen next? And I was like, well, and it's hard to recruit a new CEO for like a company that's doing, small numbers of millions of dollars a year and of revenue and not growing and has 12 years of history behind it. So I was like, well, if they want to talk about me coming in and saying, and one important note here is the second largest shareholder in this company is the widow of my co-founder, Joe, and she's a school teacher. So like the second largest shareholder in this company, they were like, what's the future of it? Should we find a buyer for it? Like all these things kind of like we're wondering, you're like, and so I was like, well, if they feel like they don't see an obvious thing to do, like have them give me a call and like I'll talk through maybe being involved in some way and we'll see. So the board, reached out and we talked and I was like, well, the bar for me is like, I would want to talk to the team and kind of see if I could get excited about a new direction that might change the course of the company. Because I don't want to come in and like operate a company that's just going to sort of be flat forever. And so anyway, so we kind of came in and dug in with the people who were there and, talked about some cool ideas of stuff that we thought that could sort of, spark growth in rescue time and create some value there. And like you say, I'm in the same mind that if you build a profitable company that is growing, someone will buy it someday. Like, and no urgency with that on rescue time at this point, because again, profitable company, like growing very slowly. But yeah, so that happened in like late last year. Conversations happened. I spun up in February, and then coronavirus hit, which is a good test. But the company's doing well. We boosted growth a little bit with some just kind of funnel optimization stuff and have some cool, actually really big kind of product reboot on the horizon that I think is pretty exciting. So we'll see.
You moved to Austin too, though.
Ish, yeah. I mean, I was like, so in the outstanding timing. So I decided, well, okay, around this time, I was like, I think it's time for me to leave Seattle. Like I wanna go. Like I feel. I mean, there's a bunch of complicated reasons there, and that Seattle was like Alex and I's place, and all of our friends there were Alex and I's friends, and I felt like I had this sort of widower brand on me that I was like, I probably, need to not have that brand. I don't know. It just felt like time. And, the standard reason you leave Seattle of like sunshine, wouldn't break my heart. And yeah, just change, bunch of reasons. So I decided to drive out of Seattle and drove out March 1 with the intent of like exploring new towns. And I had a long list of towns. I'm like, well, maybe Santa Fe might be cool. Maybe Austin. My parents live down in Austin. There's some California towns I'm my eye on. And then like, just then, like a bunch of people said my going away party was the last social thing that they did. So this is like the sort of the coronavirus starts to hit. And I was in Santa Fe at the time and I was like, am I going to be trapped in a pandemic in this town where I know no humans? And I was worried about my parents down in Austin. They're old and right smack in the, scary spot for coronavirus. So I was like, well, I'll head down and hang out with my parents. And then, hung out with them. They live in a retirement community north of Austin. And I was like, and then it started stretching out. I'm like, I don't want to live in a retirement community for like the next however long this thing lasts. So I dashed up to southern Utah for about a month, hung out up there, got to play in Zion National Park when like they weren't letting anyone drive in or any of the buses go. So I got to bike around Zion basically by myself, which was pretty amazing. But then I was like, okay, where do I go? And this notion of like going to towns and exploring and meeting new people and networking and all the things that you would do if you're like, when you probably moved to a new town, you started doing, like, you can't really do that when the wagons are circled and everyone's like, I have a quarantine that is like 4 people and you're not it, buddy. Like, so yeah, so I kind of came back down to Austin and wanted to hang out, near my folks. In the other sort of fun death stuff is my dad has terminal cancer and has some amount and like he's in a really good headspace about it, but kind of realized I had finite time with him. And so being close to him was a thing other than keep an eye on them with coronavirus. So yeah, I'm here and like not convinced I'm here forever, but it's surprisingly cool. And yeah, 75 degrees and sunny right now. It doesn't break my heart.
No, I imagine that. And you guys are at Rescue Time. Are you a remote team or?
Yeah. It's always been a remote company, which is funny because like when we talked about like, well, who's going to buy us someday? When you have those conversations, the answer is like nobody, because we're a remote team and like no one's going to buy a remote team except the 4 or 5 other big remote companies, and none of them are in our space. Now everybody's a remote company, so that kind of changed the game. But at the time, we were kind of unique in that we were sort of remote first. We always had been. We had team members in Nashville and Montreal, Florida. Gosh, where else? Atlanta, Seattle. all over. So yeah, so it was like this whole coronavirus thing is like didn't change the thing at Microsoft other than like obviously the parents on the team have a very different life when they're trying to sort of homeschool kids and do remote learning and stuff. But yeah, so pretty similar to how things were.
So that it's good to catch up, man. I hope there's a lot of great nuggets of lessons in here for any entrepreneur. And I think it was actually really interesting to hear you come back to Rescue Time. I think you wrote a blog post for me that still to this day gives me SEO power in the Rescue Time blog when you were, I think when you first started and we were talking. So I'm grateful for that. And I'm grateful for you sharing everything. What 3 tips, Tony? I don't even think I prepared you for this, but I know you well enough that you'll come up with. What 3 tips would you give fellow entrepreneurs who are looking to start a business?
Oh boy. I mean, any kind of business, I think like this is, oops, I just turned off my, sorry about that. Yeah, I think, I have this like, God, I don't want to be like the death theme guy, but there's this great book on that a palliative care nurse wrote about the regrets of the dying. And one of the biggest regrets of the top regret of dying people is living life for somebody else. And I think like, there's so much pressure in the outward world to like build a business of a certain stripe, whether if you're in the Bay Area, it's like go big or go home. And, if you're, on the East Coast, maybe it's sort of government related, like you have all this sort of outdoor pressure. Here's what you should do with your life. And I think there's like, I wouldn't go and say like, do what you love, because like, there's a whole myth of that is like, if you love starting businesses, you should start a business. If you love, making pies, for God's sakes, don't start a bakery, right? Like, so, but if you really want to start a business, like you should love it. You should love starting businesses and you should love the market that you're in and love serving the customers that you serve. And, as bright-eyed and bushy-tailed as you are, and you're thinking that this is going to be a home run, like you want to sort of be in a business that you'd be happy to sort of have a, double or single and not a home run, right? Because, that's a very real possibility. But yeah, you got to know the game that sort of, gives you joy. And for some people it is the go big or go home thing, but I see a lot of entrepreneurs kind of forcing themselves into that sort of Bay Area all in sort of mindset, and it's not good for you. I think there's another of like, and you touched on this a little bit, is that, you're a different entrepreneur today than you were earlier. And I think there's a fallacy that people have, is that they are going to keep being the same person for their whole life. And I think you want to be cautious about sort of, reassessing, who you want to be at different stages of your life, and be willing to shift based on, wait, I'm a different person today and I'm going to chase different goals, even if it's a reset on sort of, what I was doing before. I'd also say with entrepreneurship, like there's ways to do it in sort of varyingly risky ways. Every single thing that I've done was a side project, or not every single thing. A lot of things that I've done have been side projects that I built landing pages for before I had software, that I had users before I had software, that I had users before I had incorporated a company. So I think there's ways you can kind of dip your toes in this sort of entrepreneurial waters in a particular market, or just being an entrepreneur in general, to see if you enjoy it, or if there's like hope in that market, right? A lot of times you'll learn that there isn't. So I think that like, being cautious about that commitment until you have the data that says this is worth, committing 2 or 3 years of my life to, or more, or like you say, you're, like you said, I'm about 4 and you're about 7 in terms of, about when you get the itch, you're like, maybe I should do something else. But either way, these are big swaths of your life, meaningful percentage of your remaining life. And like, again, I guess I'm the guy who talks about death, but like, these next 4 years of your life might be the last 4 healthy ones you have. So I think that sort of, you want to be cautious about what you dedicate yourself to, because, it's what you're going to be doing for a while.
Yeah, I think the value of time, everybody says it, but you don't understand it until you get to some moment and either get really old and then it hits you, or you have these moments along the way that, to your point, in many ways, your greatest sadness is your greatest gratefulness, because it allows you to live life fuller than just becoming this, I don't know, zombie. I do want to say, like, that whole thing about doing your passion. I have this, I mean, I ran that social networking site for fishermen, and, it's like, oh, well, you love fishing, go do a fishing company. And I haven't fished in 8 years because it totally ruined me. Right. I think there's something to be said that you got to sort of understand that. So those are really great tips. Well, I don't know what's in it for you. I think based on where you are, how long you been at Rescue? Oh, you just started. So I know that we got another 3 years to tune in with you.
Yeah.
Although you might be a new Tony now, and you might like compress that to 2 and bring them to an exit, whatever that means. I'd be excited to run that as a lifestyle business.
Yeah. No, I think, like, who knows about whether we can make it sort of venture size. And I think probably, candidly, I would think that the market so far has shown us that this is not a venture scale business. But I think, like, I can find a great outcome for, a friend of mine's widow eventually someday. I can, have these people, like the people who work at this company, like, I've never seen, like, a collection of humans who, like their jobs more. And, like, we have no one ever quits this company. Like, it's a great company with great humans who, like, care about the product, care about the customer, like, work hard, but have a sense of balance. Like you say, time being your most important asset. Like, we are Rescue Time. Like, everyone at this company is, like, thoughtful about how they spend their time, which is, like, this weird feeling, right? Like, everyone's super deliberate. It's cool. So I'm having a blast. And I think, we'll see where it takes us. But I'm optimistic.
Well, cool. Well, we'll check in with you in a few months. Thanks for sharing the story. And like I said, it was great to catch up with you and see really review, because there's a few pieces there that I think I had missed in between catching it on social media. So
yeah, likewise. Well, when you're not interviewing me, I would love to catch up more on what's going on in your world too.
Yeah, right on. At any time, you're welcome to. I told you this. There's a spare bedroom here in Half Moon Bay and some ocean air, and it'll give you a little bit of a break from being landlocked there in Austin.
Yeah. No, I miss oceans and mountains. That's a hard thing.
Right. All right, man. Well, thanks a lot. Take care of yourself. Have a good holiday season, and we'll catch up with you soon, Tony.
All right. Thank you, sir. Be safe.